Today's video, I'm going to explain what dividend stocks are. I'm going to speak to you like you're a complete beginner and you have zero idea of what a stock is. There's so many intermediate videos out there and they already assume that you already know what a stock is and what stock dividends are. So today, what are dividend stocks? What are stocks first? And how can you profit from dividend stocks? So stock is basically an ownership in a company. So if you go out and buy Microsoft stocks, you can say you're an owner of Microsoft. Now, to what degree you own this Microsoft is determines the level of leadership and control you have over Jeff Bezos. So if you buy one share, you're probably not going to get Jeff on the phone. That's it. So a dividend stock now is basically profitable companies who have already been big and well established, companies like Apple and Amazon, who make a lot of profit and they say, what can we do with this profit? So they reward their shareholders with cash for holding their stocks. So for instance, if a company has 100,000 stocks and he decides to distribute $100,000 in dividends, so each and every shareholder will receive $1 cash sent to their brokerage. If you have one share, you will receive $1. If you have 5 shares, you will receive $5. So those are dividends from the excess profits paid in order to reward shareholders, like incentivizing holding their stocks. So not all company stocks are dividend stocks. Not all stocks are dividend stocks. The stocks you see that pay dividends are more established companies like Apple and Amazon, for instance, Coca-Cola. You see, even Tesla is a growth-oriented company, meaning that it will invest all its profit back into the company. So if you're a shareholder, the only way to make money from Tesla stocks is through trading, is through buying and selling, like buy low, sell high, buy low, sell high, those kind of things. But as far as Elon sending you a check, that's not going to happen. Okay. So there are 3 dates you have to know when dealing with the dividend stocks. Before we get into that, how do you identify a dividend stock? When you look at the stock quote, you see something like the yield. The yield shows you the percentage of how much the company is paying. So you can see a 0.60% yield or 1% yield. Those percentage points of the stock which the company would pay. So if a company share is trading at $50 a share and it has a 1% yield, so 1% of $50 will determine the yield, or 1% of their net profit will determine the yield. Majority of you would see companies with 20% yield, and it's very alluring because these companies, in order for to get your investment, they increased their yield by like 30%, 50%, and you say, instead of putting my money in a savings account and get a 1% return, why don't I dump it into this stock? But my friend, that is a Ponzi scheme, because majority of these companies, either they are bankrupt, signaling they're trying their best to raise cash somehow, even if it means stealing from you. So they put all this alluring yield, and when you invest into this company, it's either they slash their yield to nothing, or they remove it completely, causing the stock to plummet. Either ways, so you are losing your capital and receiving nothing in return. So it's a double whammy for you. You don't want to be invested in those kind of company. For me, that's just personal opinion. It's a red flag. So there are 3 dates you have to know when purchasing dividend stocks. You have to know the X date, the declaration date, and the payment date. X dividend date is the date you have to hold the stock before the dividend is paid. So there's a certain date that in the stock already. It signals the date you should be in the stock before payment is handed out. So if you get into the stock, if you purchase that stock after that date, you're not going to get dividends. You're not going to receive any dividends in your brokerage account. The second one is the declaration date. As the name states, it's just to declare that dividends will be paid on this date. The third is the payment date. As the name implies, the date where the company would send you the dollars into your brokerage account. So if I've held on to my own part of the deal, you've understood how dividend stocks work and how to profit from them. You know what to do. As always, I'll see you in the next one.